Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar has attempted over the week to take on the challenge of the 77 cents. With the resistance still seen at 77.45.55, I do expect to see the bears to defend this region and send the market back towards 76.75 to 76.40. The strategy is still to sell into strength, so towards 77.5 should be a place where the market should feel comfortable to shorten and look for this sell-off eventually to come through due to the technical implications not overly bullish. The euro dollar edges higher overnight, but still confined in a tight trading range since Wednesday's Fed decision, with ahead of this week now looking at the US non-farm payroll report. With the Fed keeping rates unchanged, still looks for a December hike though. So therefore we should see dollar strength to come through and initially see any challenges towards the top side of 117 and 0515 to foul. It is viewed from a technical point that the market should sell off towards 115.5 and even eventually lower to 114.70 and reassess from there. My view on dollar yen is still a little bit concerning on the top side that we have failed on many attempts of this 114 level, as you can see here in June and also back in May. And with the recent failed attempts does conclude that we should again expect to see a failed attempt today with the outlook for a pullback. My strategy is still to buy on dips, but not towards 113.5, but more towards 112.80. It is viewed from there. The recovery should then take out 114.5 and head towards 116. As a break above that 114.5 region would trigger many stops. As expected, the Bank of England did raise rates by 25 basis points overnight, and the first time since 2007. However, the market has seen this rate hike as a dovish move, and therefore you can see that the market did tumble very heavily overnight from the 133 and taking out the 130.60 support. At this stage, I would rather sit on the sidelines and wait to get a better direction from the indicators, as we could see a lot of noise and whipsaw price action between 129.75 to 131.5. I feel it would be very difficult to trade this market at the moment due to the uncertainty of direction. My gold outlook though is still bullish, and I still expect to see further gains to the upside. With the overnight high of 84 briefly, I do expect to see both these levels of 79.83 to be taken out today, and a rise up towards 12.90 as a potential target. Any pullback should find support from 12.70 or firmer from 66. The silver outlook still remains bullish, even though we have an attempt at this level 17.25. From the surge that we got from the break of this short-term downtrend is the fact that I'm looking towards 17.45, and any weakness should find support now from 16.85. And to wrap up with oil, the market is still contesting this topside region of 55 to 55.60 dollars a barrel. With the dojis in place from late December to early January this year, I do expect to see another failed test, although if broken, this will completely turn the market further to a bullish conclusion and look towards 58 to 62 as a target. That said, if we do get a rejection, then I'm looking back to this uptrend of 50.85. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful weekend that's about to commence.